Hello and welcome to Pairs of Aces. I'm your host, Adam Lemon, the Chief Analyst at DailyForex, and I'm joined today, as usual, by Huzefa Hamid and Christopher Lewis, Senior Analyst at DailyForex. Hey guys. So today we are going to be talking about a few things. The stock market and the Santa Claus rally that sometimes hits at the end of December. The US dollar and major Forex pairs. Bitcoin, which went down but is now starting to come up again. And precious metals are rearing their beautiful shiny heads. But maybe our biggest conversation today is going to be, what do you do as a trader when there isn't much going on in the market? Which is going to be a philosophical but actionable debate, I'm sure, with something for you to take away. So even if that doesn't sound too exciting, please do stay for that last end bit, because before we get there, we are going to be doing some analysis anyway. You can please do, in fact, subscribe to our channel. You'll get all the updates. You'll get to hear about everything that's going on. And remember, there is space for comments under these videos. So if you leave any questions, we will answer them at our next episode. So without further ado, now the intro is past us. Let's move on to the meat and potatoes. Guys, the stock market, we talk about this every week. I know, the eternal stock market with the wind at our back, that is one of the few things that tends to, has a directional bias over time. The stock market is your friend. As a trader, the US stock market is, especially, I would argue, your best friend as a trader. And we're about to get into December. We're at the end of November, so December comes next. First of all, I'm sure you guys are still bullish. We got like a bit of a wobble last week, and I started thinking I really should have been more bearish 2 weeks ago. Like, I started to see some very subtle leading indicators that we're getting some more volatility and things are looking a bit more wobbly. And personally, I'm not sure we're going to see a new high this year or maybe even early next year. That's my slightly controversial take. And that kind of goes against the fact that, it's still a bull market. We're still not that far from the highs. It's been a good year for the market. The market's up. We're getting into December, which is often a good month when markets have been going up. So I'm not sure why I'm a little bit bearish. I think I just sense that it's running out of momentum. What
I
do you
can tell
guys
you
think?
why you're a little bit bearish, man.
Why? It's too good to
The
be
reason
true.
you're a little bit bearish is because the valuations of the underlying companies are freaking silly. They're just bonkers. And you got to look at that and think, oh my goodness, what are we doing here? And then you look at the technical picture and it's upside down. And I don't blame anybody for years ago. I read this statement that the stock market's climbed a wall of worry. And that's all that happens. It goes ratchets up, ratchets up, ratchets up, and people worry more, worry more, worry more, but it still moves. That's, I think, why me and everyone else and their dog
That's a good
feels
point,
hard.
but that's not my reason, because I tend to think, I know I have some friends and relatives that big believers in fundamentals, and I wouldn't say I don't believe in it, but I feel like, anyone could sit down and make me a case as to why the stock market's about to crash, and I could walk
Yeah,
away believing it. Or like they could make the opposite case, like people who have the facts at their fingertips and who are very convincing. Whereas like I see, like, when you see the price, it's not, I mean, it might be lying, but it's probably not lying. And I think that's more reliable, though, I'm probably going a bit too far with that. I mean, I'm not sure about the valuations, but just think how many good trends you'd miss, especially in stocks, if you thought it was too much. I mean, there was one year in the 90s where I think the S&P doubled in value, or maybe it was the Nasdaq. And that whole year, I remember it. Everyone was saying it's too much. It's not going to last. It's going to come down. Well, if at least you stayed in it until the collapse, you'd have made a lot of money. And you can always find excuses not to hang on and not to make money. So that's probably not why I'm worried. I just think I see a little bit of volatility, especially in other markets, especially in the Forex markets. And I'm a believer that when you start getting unusually large volatility, it's often a sign of an impending downswing in the stock market. What do you think, Chris? You still bullish?
Well, I'm never bearish. Um, I just don't bother shorting indices. I'm very vocal about that. That doesn't mean you always buy it. As far as stocks are concerned, I mean that you can make special cases for certain companies. There's a couple things that I think about right now as far as the indices are concerned. Number one, the concentration. It's all about AI. If AI catches on fire again, the stock markets will just go straight up in the air. The problem, of course, is we're starting to ask questions of AI and its profitability. And most people are starting to talk that AI may not actually be a boon until 2030, and the market's way ahead of themselves. Now,
Hmm.
having said all of that, I have two theories as to what's going on outside of that. One is an old expression that markets take off from overbought conditions and they crash from oversold conditions. So I still lean to the upside. But I also think that part of what we're seeing is that people aren't trading the stock market anymore. Algos are. So with all of the noise in places like Twitter or X or whatever, Bloomberg, CNN, CBC, whatever, I think the machines reacts so quickly that it naturally causes a little bit of underlying volatility. And one of the easiest examples of that right now is going to be interest rate cut expectations in the United States, which is a different topic that we'll get to, obviously. But we're seeing wild swings in the dollar for no
Hmm.
reason. No reason other than press button first, think second. And that to me screams it's a different market in the sense that the machines are making decisions in milliseconds when somebody who has a little bit of expertise may think about it for a minute. Remember earlier, the expectation was something like 86% that there was going to be a cut at the next meeting, and then it dropped down to 30. What
And
changed? The answer
now it's
is
back up to
nothing.
83.
Yeah.
Yeah,
Yeah. I
I
mean,
was one.
it's nonsense is what it is.
I
And
think there was
humans, I don't think control things like that anymore.
a Fed, one of the Fed board members, I think, made some comments and maybe might have driven it down. And then when that kind of war forget, yeah, I mean, it's ironic, being a kind of financial journalist, I'm a bit skeptical about how, I come to my desk every morning and I have to write something. I have to explain what's going on. And sometimes I'm searching desperately for the cause. And I try to just say this happened and nobody really knows why, just like you're saying now. But people
Yeah.
hate hearing that because they want an explanation. But
They always, the first question I get when a big move happens is, oh my God, what happened to gold? And I'm like, it went down. I mean, there's
Price,
your answer. Yeah.
price happened. That's what
Yeah.
we trade ultimately as traders. We don't trade reason, we trade price. That's all that really matters to us.
Yeah.
You know,
Reasons, I think reasons typically are used to, um, like if I have a big position on in Bitcoin,
Mhm.
and we've seen what's happened to Bitcoin in the last couple of months, you start to hear people screaming about manipulation. Well, that takes the fault out of your hands and puts it onto somebody else. It's a
Yeah.
psychology thing. When the reality is the decision was to get. We were talking about this before we started. The only thing you really can do, the only thing that works 100% of the time, is cut your losses very quickly. That's
Yeah.
it. I mean, there are systems that are profitable or whatever over time, but that's the only thing that will keep you alive. And you can always tell by the way people are talking whether or not they cut. Because if you were in Bitcoin at say 111,000 and you got out at 107,000 or whatever
you're not,
the case may
yeah.
be, you're not that upset right now, and you're actually looking at this going, "Wow, I can buy it all the way down here." Totally different mindset. All it take was clicking a button. So I think that is crucial. And when you see the kind of noise that you see in the stock market right now, it's not wrong to be out of it, because why put yourself through the stress? You trade to live, not live to trade. And the the volatility, I think, makes sense anyways, because all you have to do is look at a chart from April. We basically went straight up in the air. Sooner or later, somebody is going to take profit out of the market. So I don't know. I think there's a lot of things going on, but it'll all rest on Nvidia and a handful of other companies as per usual. That will tell us where we're going next.
I actually had a look at. Sorry, go ahead.
Go ahead. And when you look at the stock market, you look at people talk about the volatility. Really, there's been one big support in the last 6-7 weeks. That was October 10th at around 6,500.
65. I thought of you. I saw it. It came down. And it bounced off 65, yeah.
Exactly, and it moved up. And it's just like, technically, if you take out the fact that it is the stock market, or take out the valuations, and you don't think of it in any kind of fundamental terms, you look at just a technical picture, all you're seeing, and Chris is absolutely right, you're seeing a technical uptrend with a retrace, holding support, period. That's all you're seeing, and it should be a trader's dream at the moment. Any trader should have done very well following a stable trend over the last 6 or 7 months. It's just when we start factoring in what that market is fundamentally and the valuations and what could go wrong, then we start, the clouds appear in terms of how we follow the market. But as a technical picture, it is beautiful.
How do you feel about recency bias, Huzefa? Because I think that's part of it too. When you've had a stock market that's gone straight up in the air for 8 months or however long it's been, you get a little bit of a wobble, and it feels like we're in 1929 almost. I think that's part of it too.
Yeah.
If we hadn't gone straight up in the air,
yeah, you get
what we're seeing now would be like, oh, the market's still confused, and you just wouldn't even think about it.
Yeah,
that's my opinion, at least. I think there's some recency bias.
I think that's true. So it's going to be December in a few days. December, I was thinking about this because I was going to write an article about the Santa Claus effect, or the Santa Claus rally as it's called. And what this is something that people think is a thing in the stock market where it tends to go up in December, or at least at the end of December. And there's all kinds of reasons that have been, speculative reasons why this might happen. So I decided to take a look at some historical data, and this kind of taps in also to seasonality. Some months historically are better performers. Whether you take this information and do anything with it in your trading, that's a whole other question. But let me run a few little stats by you, which I thought were kind of interesting. I went back to 1927 when the S&P 500 didn't exist, of course, but you can kind of recreate it historically. The average monthly return of the S&P 500 since 1927 has been 0.65%. Just under 60% of months produce a profitable return. So that's a good reason why it's, interesting to be long of the American stock market right there. Then I took December and compared that. So just the December returns. The average December return has been almost double the average return, 1.28%, and 72% of months Decembers have given a positive return. So remember, this is since 1927. Now let's look at the last 20 years, where the story is a little bit different. The average monthly return of the S&P 500 in the last 20 years has been 0.8%, and 57% of months have given a positive return. So that's still a pretty good deal, right? In fact, on average, it's slightly less winning months, but it's a higher average return. Now, in December, the last 20 years, the average performance has been 1.28%. So we're still seeing over the month of December this outperformance, this seasonality. Okay, it's only 20 years. It's only 20 data points. And I took it further and I thought, well, what about, momentum effect? Now, if the market is up on the calendar year by the start of December, it's had 11 months of making some kind of positive gain. The results are dramatically better. The average December return, we're going back to since 1927, is more than 2%. And 78% of Decembers, where it's been a positive year, have given a positive return. But in the last 20 years, it becomes a lot worse. It's only 1.28%, not 0.209. Of course, that's still, better. So what I'm saying is, according to these stats, December for the S&P 500 looks like it's going to be a good bet. It looks like we're going to get, another 1% plus. If you go by the historical averages, it looks like the chances are pretty good that it will be a positive month. And I don't really know what to say about that, because I'm not a big believer in it, but I would, to anyone out there who's, interested in the S&P 500, I would say, there is evidence that the kind of Christmas New Year rally has disappeared a lot over the last 20 years. I have looked into that a bit. If you go to ChatGPT or any AI and ask it, it will confirm that to you. But I think where stocks are near record highs, or they've been going up all year pretty much, December should be a good bet. So my call is, I'm not thinking we're going to see anything spectacular. And the volatility worries me a bit, but historically speaking, being long in December when it's been going up over the year, it's been a good bet. But I think you guys, from what we were saying before, are a lot more skeptical than I am. You wouldn't be influenced by any seasonality in the stock market per se. Overall,
Christy, I've thoughts. I can go if you want.
I was just going to say real quickly, because I don't have much thought about this other than, yeah, we probably bounce. We probably go higher. We might hit a new high in the latter part of the month with low volume, because there will be some people out there pushing it around when everybody's gone. But I think it's just going to be buy on the dip, make money, take money, let it dip, buy it again. I think that's just going to be the game this year through the winter season. I think it's buy on the dip, but you're not necessarily buying and holding unless it's your retirement account maybe. But if you're a trader, you're buying the dip, you're probably hanging on for a couple of days, you'll take your profit, it'll fall again. That's kind of how I think it's going to play out. There's just so much confusion. And of course, there are a lot of questions here in the States being asked about AI, open AI. They're already asking for government money, and we're starting to hear more and more about AI just is not making money. People using AI are not really making money. They will. It'll be the future, but we need to come back to reality. And as long as there's an overhead on AI, it has become such a huge part of the stock market in general that it's going to be like driving down the road with something heavy on the back of your car. You might be able to go forward, but you're not going to be able to do 80 miles an hour or whatever, or 160
could this become like chips in the late 90s, where people were buying all these crazy
any chip company?
Basically anything, and then it all went crashing very spectacularly. I'm going
to be very selfish and say I hope it does. I really hope it does. And then once that happens, I will put everything I can into the stock market. You have to be bold in times like that. You have to recognize once you lose 10% after a 30% crash, step back or whatever your parameters are. But if we get an opportunity like that, I'm going to sell everything in the house and put it into the market.
I think that's the right play, period. Yeah. There's three things I want to say to what you said, Adam. If I factor in your edge for December, let's say there's a statistical edge in being bullish in December. I factor that in to the fact that 6,500 held in the S&P 500. It held as a support, and we're in the middle of in the middle of an uptrend. We're in a bullish bias. Then yeah, absolutely buy. You want to factor that in? I think that's great. I ran an analysis in the early 2000s on Octobers, So October used to traditionally
Yeah,
be
bad
a
months.
bearish. Yeah. And I did it across 3 indexes, S&P 500, NASDAQ, and one other index. It might have been the Dow Jones. And I just looked to see if October was bearish or bullish. 11 out of 12 times it was bearish. I ran the same analysis about a month ago, and that's just dipped like 50-50, just a tad above 50-50. I think those seasonalities, they've washed out. Those kind of basic truisms that used to exist in the 80s, the 90s, the early 2000s, the things that people were teaching back in the day, like half a generation ago. I think the markets have just become way too efficient. Like these inside
Too
bar,
many machines.
yeah,
You don't have humans. You don't have Huzefa going, oh my God, I've got to explain to the wife why I've only made 7% this year instead of
yeah,
14%
yeah,
Fred, the guy down the road, has
yeah.
made, so you don't
So
have that pressure.
yeah, I'm just not relying on those seasonalities. But the technical picture is bullish, and if you want to factor in the current edge for December, I think that's absolutely fine. I just wouldn't trade off of that by itself.
Yeah.
The
The
third,
secondary indicator,
yeah.
tertiary maybe.
I had a haircut yesterday. My barber asked what I'm up to, and I said, "Oh, I'm recording this podcast tomorrow morning about the markets." He goes, "Oh, tell me something about the markets." And the sentence I gave him is, "The markets are going up. They are weirdly going up. It's going up. It's a truth. It's a fact, and it feels weird." And I pulled out some data points on the top 10 stocks in terms of PE ratios, and this is what I mean by weird. Nvidia P right now 44, Apple 37, Microsoft 33, Amazon 32, Google 32, Broadcom 98, Meta 28, Tesla, the PE ratio 280, and then
Sorry, I have
10.
to laugh. It's just crazy.
I know. That's when I put my reading glasses on. Am I double imaging this? Um, And then Berkshire Hathaway, P ratio of 16. I think as an individual stock, Berkshire is a great play. I looked at the chart. It looks beautifully bullish. Like it's just made this, everything's trading in a bit of a range in the last 6-7 weeks. Nothing is just like going up. Apple is near new highs. Apple's it's the strongest, it's the most resilient, but I think the most resilient play is going to be Berkshire Hathaway. It's made this really nice base in a range. I think if things start selling off, if the party ends or the music stops for AI and people are less enthusiastic about it, I think companies like Berkshire Hathaway, companies like Costco, these real kind of brick and mortar businesses that people understand, I think they're going to be super resilient. These kind of value proposition companies.
Isn't
Well,
Berkshire
Berkshire's sitting on a ton of cash too.
Yeah.
Yeah,
That
that's
doesn't
right.
hurt.
Isn't that the stock that has like a crazy valuation, like $12,000 a share or something? Like
He's never done a stock split. He doesn't believe in stock splits. The idea is that like as every other stock as they've gone to like $100, $200, $300 per share, they've split 3-4 splits, whatever. So to try to keep it down to double digits, so quote unquote the public can kind of understand, wrap their heads around it.
There are the B shares though, which I don't even know what they run these days. There's like the A and the B shares you can get, right? Is that correct?
That is, yeah.
Okay.
I don't know what, we can look it up, but yeah. But that to me is a psychology. Like whether a stock is worth an individual stock price is 10,000 or $50. People think of like retail, the bottom of the barrel retail will look at $50 and go, that's cheaper than 10,000, and not look at it in terms of market cap or PE ratio or value or whatever.
Yeah,
or
no,
it's irrelevant. The actual number in isolation means nothing. It's what is it in
people feel something, they want to see. I feel like individual stock prices are higher than they used to be. There's so many.
I have a data
point. The dollar is higher.
He's got a data point.
Buy my school lunch was £1. It was 95 pence. I can't
95 pence.
95 pence is my school lunch when I started school in high school. I can't get a freaking candy bar or pop for that.
No, not at all. So I have a data point. Berkshire Hathaway A shares at the open today will be, or at the close of yesterday's session, Wednesday the 26th, were $771,360.99. Pretty much a bargain. And Berkshire,
$71,000.
yeah,
That's
almost 767, almost 768. The B shares are around 515. So there you go.
Bargain.
thank
Pick your
God for
poison.
B shares, huh?
Yeah.
Otherwise,
Sneakers or one B
is your
share.
broker offer fractional shares in Berkshire Hathaway?
One day when I'm generationally wealthy, I'm going to own 3 shares of Berkshire Hathaway. But
Yeah,
you know,
no. I bought it in
See how
1960 for 3 nickels and
you
a candy
can't.
bar. I've
Yeah.
been sitting
right,
here for
right,
70 years waiting to get rich. Now I can
right.
hobble into our
Chris, they're
AGM.
optionable.
So
Chris, they're
They're
optionable,
optionable.
right? Berkshire Hathaway is optionable. We can just go out and buy a call option if we wanted to, like a
Yeah,
1 year or
yeah.
2 year out. If we really want to go long Berkshire, and we do want to
Yeah.
knock out $500 or 30 grand or whatever.
Yeah,
It's not a bad
I
idea.
mean, it's hard to tell what the option prices would be. I mean, there's still that, but
Yeah.
you're right. It is possible.
Yeah.
So that's the end of the stock market for today. Let's talk about Forex and the US dollar, which, like you saw, we're saying earlier, Chris, we saw some weird swings. We saw these strange fluctuations and expectation about whether the Fed's going to cut next month. I always thought the Fed would cut next month, and it seems now that there's like an 85% chance of it being priced in. The dollar's in kind of a bullish trend. I think you
Mhm.
probably have to say that over the long term. But it's
I'm
coming.
looking at a Dixie chart right now.
Yeah, it's come down quite a bit this week. The major pairs, I feel honestly lately it's just like it's either the dollar's kind of coming up and everything's going down against the dollar, or kind of the usual suspects are up against the dollar. And you can almost tell by even before the London session, like I know I don't want to make it sound easy because it isn't when you try to trade like this, but that kind of idea that you'll just kind of look at the markets and you'll know which direction to go. But I feel, probably lazily that the Forex market it's a bit like that. There's nothing too crazy happening, though the New Zealand dollar is getting a big boost, and I'm not even sure why. I think they just
I think
cut
it was just
rates.
shorted that heavily.
Yeah,
I
that had
think this is the week. This is the week of the pullback. I think markets have been trending. DXY hit like a resistance area. It hit like a round number of 100, which has hit a bunch of times in the last few months. And it's just everything is just like pulling back a little bit. Bitcoin's pulling back. Everything's retracing. Like we've had some strong moves, and everything is just like a little bit of no man land territory. Just pulling back, profit taking. Everyone's kind of reassessing. It's the end of the year. What's next? We're just in that kind of hazy territory, which is where the opportunities are. It's like when the markets are kind of settling a bit, you have a big picture conviction. This is where you start getting into things.
This still looks like a rounded bottom to me so far.
On the Dixie, yeah, 100%. Yeah. It's just there's a resistance level at 100. I don't care much for round
With
numbers.
the 200-day EMA.
Yeah, and it's just bouncing up against that. That's it in the last week. But that rounded bottom, it's like a 6-7 month thing, and if you've got conviction in that, these are good pullbacks to get in.
So you're still looking at, long dollar trades. You think that that's going to be the future?
I am still long dollar. I am still long dollar in multiple trades. I did trim a little bit in the middle of the week. I'll probably add beginning of next week if we get any bounce whatsoever in the Dixie.
How do you feel about GU, man? Pound dollar.
Yeah, no, it's interesting. I mean, they just had the budget in England yesterday. A lot of tax rises or like stealthy tax rises. But it doesn't really seem to have affected the pound much. Pound's been fairly healthy. I think maybe just because inflation is quite high. So there's a feeling that rates are going to be higher. So maybe it's, you're seeing the dollar get cut. Maybe people think the pound's going to stay. So maybe that's a case for, being long of the pound against the dollar. Or at least, if you're going to be trading baskets and you still have faith in the US dollar, maybe the pound is one currency you wouldn't want to short against the US dollar.
at the moment, I believe that's true. Longer picture, I still think it's going down.
Yeah.
But there are easier trades. Until a couple of days ago, shorting the New Zealand dollar was a perfect example. Why fight the pound in its nonsense when you could just short the New Zealand dollar? The pound, though, I do think will eventually succumb to the dollar, because I think what's going to happen is people are going to look around and go, something's not quite right. And when that's the case, they run to the dollar. Do I think the pound is going to be obliterated? No. But that's a relative game. As you know, Forex is all relative questions. The pound will be okay. It was okay on the way down the first time. It performed better than many of its peers against the dollar, both going down and up. And that probably remains the case in general. But as I look at the dollar, or at the pound dollar chart right now, we are sitting right at the 200, right at the 50-day EMA. We're at 1.3240. We just broke the 1.232 handle, but we are forming a neutral doji candle after that big 3 or 4 day move. So this might be short lived. We just don't know. I still favor the downside, but I think the pound is, it may play catch up, but it's just over the last couple of years, it's been better than some of its contemporaries against the US dollar.
Right.
So negative, but I wouldn't bet the farm on it. I wouldn't put a huge position on it. It's just one of many for me.
The one
So
thing
what
I say
about-
about the pound,
Go on.
Go.
No.
the one
you
thing
go
I,
on.
the one thing I say about the pound, it didn't make a really solid, rounded top pattern, and I'm
Yeah.
got huge
Yeah.
conviction in that. Now, I think
That
the
is
pullback, you've
really
got to be
interesting.
wary of pullbacks because the pound had a pretty precipitous fall off in the last couple of weeks. So the retrace is going to be equally kind of wild, and you can get, if you're short and you get short late fall off, you can get stopped out in a pullback. But the big picture, so you've got to kind of like pick your battles with the pound, with anything in life,
Yeah.
in trading, but pick your entry points. But I think that rounded top I just see as a big rain cloud over. I think the market and the institutional market, the big money has decided the pound just doesn't belong up in those elevated levels. It's slowly wedging its way down.
Okay.
You'd have some news, you'd have some, the Bank of England saying this, that, and the other, the Monetary Policy Committee making comments about interest rates, their inflation prints, etc. And that will give some short-term volatility, counter trend. But big picture, I think institutionally, people decide the pound should not be worth where it used to be. And I think that's what's created that big chart pattern.
Yeah. So I wanted to spend just to move on now from Forex and spend just 2 or 3 minutes talking about Bitcoin and precious metals, which maybe gets a little bit dull because we always seem to be talking about it. But I think Bitcoin's kind of fascinating because it's so technical. And we've seen it go down for a few weeks and it looked like, it fell all the way to about 81. But now it's come back up. It's had, an up week, its first up week for several weeks. It's trading above. There was a big resistance level about 88. It's actually trading about 90. Now we've seen this kind of rally in Bitcoin, although it's a bit of a small and weak one. Do you guys think it's significant?
The candlestick today looks, if this holds, it looks horrible. And I'd like to point out, Huzefa and I got our first Bitcoin. I don't want to call him a Bitcoin bro, but for lack of a better term, Bitcoin bro comment. Did you see that? There was a comment going, "These two don't know anything," or "These two know nothing," or something, and it was totally Bitcoin related.
Oh, what was that? When I was
it was when it was just it was last week. So
well,
I almost sent him a message and said, "Hey, we have fans." But again, that goes back to, and I don't know this particular traders, and if you're out there, hello, by all means, please keep watching. If for no other reason, you can trade the opposite. Yeah. If you think we're wrong, then take the other side. That's fine. That's what markets are made for. And we might be your greatest contrarian indicator for Bitcoin on the planet. Who knows? But that's what I was saying at one point. It's the psychology. There are people out there who have been wearing this thing since $122,000, and they will
Oh,
hang on to it for years. Well, that's happened both times Bitcoin's crashed. You've had a lot of people out there
yes.
hang on to it for a couple of years, and then, 4 years later, oh my God, I've got my money back. When I'm looking at the chart right now, 92,500 is an area that I consider to be somewhat important. There's like a little bit of a range there. We
Mhm.
tried to get there today and gave it up. We are in the process of forming a shooting star. Whether or not that holds throughout the day, who knows? But it is Thanksgiving in the United States, so the volume's down. We pull back from here. I think it suggests best case scenario, we consolidate between 80 and 92 and a half. And quite frankly, that's what Bitcoin needs. The last thing you want to see is it going straight up in the air. It's just the institutions are involved in this now. That's not how they play the game. So they want reliable returns for their clients. This is a completely different asset than it was before. This isn't a bunch of guys on Reddit hyping it up on their phones, buying it. These are people, very serious, intelligent people putting millions of dollars into the account and millions of dollars into research, into quantifiable research and statistical research. Teams of PhDs are messing with this now. And until they're convinced, it doesn't matter. So I think best case scenario, we go sideways for a while. And I do think that would be healthy, actually.
Mm.
When Chris talks about Bitcoin being a serious asset class now, it's got a 1.8 trillion market cap, and that should tell you everything about how there is very serious money in there. But the market, after any kind of precipitous fall, like Bitcoin has had, near vertical fall, you're going to get pullback territory. That's all we're in. We're just in pullback territory. Chris, my lines on the chart, I've got one line at 94, which is like a 50% retracement of the last four. And then the line above that is around 98. But it's around what Chris has said, around 92, 94. I don't know if it'll be 92, or it'll be 96. We're going to get retraces after falls like this, especially in a market as emotional and has such a cult following like Bitcoin. It's
Yeah.
going to be a wild ride. It's a wild ride up. It's going to be a wild ride down, particularly because there's no fundamentals or anything pinning it. It's not a medium of exchange. It's not a store of value. It's not an asset.
Agreed.
It's not a business that earns. There's nothing. It doesn't mean it should be worthless, but it doesn't have those traditional anchors that a stock like, I can harp on about how expensive Nvidia is. It's still a real company that makes real things, that sells it to other real businesses, and it's in my computer, it's in your phone or whatever.
Yeah.
You can
These are real
confiscate buildings, all kinds of things if they go
Yeah,
under. Yeah,
yeah,
there's an actual there.
yeah, yeah. Bitcoin
I,
doesn't have any of that, and it's going to be freaking wild as a result.
I tend to
It's not
agree
even a
that
future contract,
Bitcoin's
freaking
probably
natural
not
gas future contract. Yeah.
doing anything like too significant right now. But we see something a bit different now in gold and silver. Silver got to within 10 cents of its all-time high yesterday. It came down from there, but it's back around, I don't know, 52, something like that, 53. Its high was just under 50,
53.48 right now.
53.48, so that's only $1 under its record high. Gold is in a kind of triangle, and it was trying to make a bullish breakout. It's trading above 4,100. We talked a couple of weeks ago, there was this amazing trend in gold and silver, wonderful bullish trend. I made some money. I'm sure you guys probably did too. And we were talking about, well, is it going to make another breakout? And we thought that if it did, it probably would be a flop. Just because these kind of second breakouts after big rallies often tend to be flops, which I think is an interesting area that a trader could get into, because, you maybe have a system of buying breakouts, but if you can make good calls on them, you could really up your profitability. What do you guys see on gold and silver? Would you tend to agree with me that it's probably not really going to amount to anything and it will turn around even if it does just make these highs? Is there a case to short them from a failed breakout? What do you think? I mean, especially silver is, riskier than gold and more volatile. That was the one that got really close. Yeah, I know you don't. I don't like the idea
I
of
hate
buying
silver. Yeah.
I don't think it's a single
You need to go on
episode
another
we've
hike
recorded.
and see if you can hear people talking about buying silver again, and go short if you do. You
I
know.
don't think there's a single episode we record where Chris doesn't say, by the way, I hate silver.
I
We
hate
give-
silver.
We give a solid
I-
analysis, and at the end,
Chris,
by
could
the
you
way,
please
I
cover
hate
silver
silver.
tomorrow? Yeah.
Yeah.
It's almost
No,
really-
I hate silver because it's like gold with a really bad meth habit or something. It will go in the same general direction, but it might have a 7% day while gold has a 1.5% day. And by the way, that can be in either direction.
Yeah.
Gold or silver is, if as the chart looks right this second, it looks like it's forming yet another double top, kind of a triple top, but the last two parts are above the one before it. Volume, of course, is anemic. So I don't know that this surge itself means anything. I think pullbacks to somewhere around 51.5, probably find support. I do think it's going to try to squeeze higher, but I just don't like the fact that the volume keeps dropping. That makes me very nervous. Gun to head, forced to make a choice, I'm buying gold. And that's probably true most of the time anyways.
Yeah.
Silver is either going to rip to the upside and cause absolute chaos, or it's going to consolidate and eventually give up. This has been very interesting to watch, but it's a great place to get hurt. As long as gold stays where it's at and consolidates, it accepts 4,000 an ounce. It's got a future to go higher.
Yeah.
That's how I feel about it. So
Yeah.
I
I
think
would pretty
that
much agree with that. Go on,
the
Huzefa.
consolidation. Sorry, man. Sorry. The
No.
consolidation we've seen in gold from April to August, where it made this ascending, or depending on which,
triangle-ish.
yeah, depending on which angle you're squinting at, it made a triangle for sure. Made a triangle, took 4 months, and I liked Chris's phrasing. It accepted that value, and then it shot up. And I have a feeling. In the middle of that, it felt really boring. In looking back at it, it looked like where the market was positioning gold for its future rise. I think when it big moves, the market then has to position itself for that move. It just never turns on rarely if ever turns on a dime. And I think that's exactly what gold did, and you can see that plainly in hindsight. But it provides an excellent case study. It's a very recent case study, 4 months of like consolidating. I think we're seeing a mini version of that playing out right now in gold, making a nice tight coil, accepting its value. If it breaks up, it's got a nice future ahead of it. I suspect silver could go the same way. I don't see a future where silver and gold will trade in opposite directions. So one will go up and the other will go down. They will go up at different rates. The ratios may change and all of that. Silver may break out first as it just gets its withdrawal symptoms off its meth habit. Breaks out. Right. What I'd love to see is silver break out that resistance, that double top, retest it as a support. And I think that is silver then accepting its new value and then moving up.
It's a much more palatable move in that scenario too.
Yeah.
If you're, like us retail traders, we might buy one contract or whatever, 2 contracts. But if you're going to put serious money into it, you're going to feel much better about a pullback, a retest, and a bounce than some kind of nasty candlestick that just shows up out of the blue. So I agree with that as well. I just, silver is the worst. Silver and natural gas, both of them. Great way to give yourself a heart attack. But silver, the only silver traders I know that are successful, that's pretty much all they do. Silver is its own world for whatever reason.
Yeah,
once you kind of normalize its volatility, once you kind of get a hand on its volatility, you position size accordingly to your account, then it feels pretty normal. That's what you have to do with silver. I think.
I mean, you definitely don't trade. Well, number one, it's 5,000 ounce contract.
Yeah.
So you definitely have to take that into account. So you're right. When I do trade silver, I tend to trade much smaller than I would gold.
Yeah, there's a micro. There is a micro, isn't there?
Right. Yeah.
There's a micro, nano, everything now.
No, there isn't.
Or CFDs. Yeah, there's
There
no. I don't think
there's
there's
some
an.
really
There
great
no.
assets
Well,
that you
they're in
can't.
the process of. They're in the process of developing nanos. I don't think they're actually out yet, but the micros are.
No.
Um, also, the
There.
CME is doing something with Forex now. I don't know if you knew that, but they're in the process of
Yeah.
trying to centralize spot Forex. That'll be very
Really?
interesting.
Wow.
That
Yeah,
is.
That'd be a seismic shift.
yeah.
That is.
We'd
That
have
would.
volume. Huzefa, that's another thing to keep in the back of your head. Volume on the pound looks horrible. This rally doesn't matter.
Yeah.
Just think of how great that'll be. But
Yeah.
I'm
It's
watching silver go up in the air on decreasing volume. So, yeah, it is what it
So
is.
I'm a little.
the way to make money in the markets.
Go
Making
on.
money in the markets is when people aren't excited about something. It's when it's in these hazy areas, when there's a little bit, there's enough. It doesn't have to be a ton of uncertainty, be it 10, 20, 25% uncertainty.
Or apathy.
Yeah.
Apathy
Yeah.
is good too.
Yeah. Oh, that's actually so true. It's so true.
Like always, we've overrun a little bit, and we do have one more thing to get through. So I might have to edit this down, but I am committed to having at least 4 minutes or so of this conversation, which is a kind of evergreen, non-topical conversation, or semi-topical. What to do? What do you do as a trader when there isn't much going on? Because I said to Chris yesterday, there's not really much going on in the market, and he said that's a great topic. What do you do when there's not much going on? Well, I mean, it's ironic. We've talked for 45 minutes, so there is something going on. But my positions are pretty light right now. I've got a lot of my money in short-term treasury bills, which is what I tend to do, mainly because the tax treatment of that for me is a bit better than if I just got the interest from my broker. I have a broker that pays interest on a reasonably good balance, but a lot of traders, especially the newer ones, it's a point worth making. They feel like you should be doing something all the time. And I've traded with amazing traders who always seem to have some trade on the go. But I think for most people, the key to profitability is being able to sit tight when there's nothing that looks good, and being able to have those days, and there should be quite a few of them, where you say, you know what, market's a mess, nothing's really happening. I mean, you can always stare at a chart and, that looks like a head and shoulders, and there's higher low there, and it's coming to the New York Open, and there's going to be some action. And we've all done it. You think yourself into trades because you want to do something, you're staring at the chart. I somehow have got much better at sitting out. What to do when there isn't much going on? I mean, you sit tight, but how do you do that? Like, I can't remember how I got from somebody who couldn't ignore the market to somebody who's very comfortable. I think maybe it was just taking some losses and getting very bored and fed up. And also, maybe a good tip is try to have another side hustle. Don't put all your side hustle in the market. If you can have a non-market dependent side hustle, if you want a side hustle, and probably the reason why most people are trading is to get a side hustle, try to do something that can generate money for you that isn't dependent on what's going on in the market. Maybe that is a great way to get yourself out of, over trading. I suppose it's related to over trading. Was this kind of what you had in mind, Chris, when you thought this was something worth talking about, or did you have another angle?
Well, no, I mean, there's a million things you can do. So, talking about the beginning trader, and I have spent a lot of time writing academies and courses and things for clients. One of the first things that really made a huge leap in my trading was on the weekends, a day you can't do anything. I pulled up charts of anything and everything. I was a Forex trader at the time, didn't care. I'd pull up stock charts, I'd pull up, commodities, whatever, and lay out support and resistance level. But start with something like 1.0, 1.5, 2.0. Lay those lines out. Notice how they behave on the chart. You start to get the idea of large, round, psychologically significant numbers. Then break down and kind of look for, okay, well, maybe the yen is finding support at 157 instead of 160. Do that until your eyes bleed, because when you look at a chart, now, and I've actually made a career out of it outside of trading, I can look at a chart and I can start naming off support and resistance level at the blink of an eye. And I could spend the next 4 minutes and I bet I could go through 20 charts, name off 10 levels that are of interest. You have to take that part of the game out. And instead of just sitting here and fumbling with it and blah, 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 you can shorten the game. The second thing that I would say is you really need to read. I would expect newer traders to spend time reading from those who came before them. Reminiscences of a Stock Operator, classic
Great
book. I read
Great
it
book.
once a
Love
year.
it. Yeah.
Something to that effect. And no, you don't have to be a stock trader to get a lot out of it. Things like that. You can backtest systems. There are a million things you could be doing, or just get away from the computer. I think some of us forget to do that, you know?
Yeah.
So
Yeah.
there's a million things.
If I had
Yeah.
to recommend one book,
Go on.
go ahead, Adam. You
No,
got it,
no,
man.
no. No,
All right.
no, dude. I just had some. What you're about to say is better than what I was going to say. I know that for a fact. So you carry on.
Adam, you're a gentleman. I don't know if that's true, but okay.
No, no, no. It's absolutely.
If I could recommend one book, it would be John J. Murphy's Technical Analysis of the Financial Market, second edition, written in the late 1980s, first 8 chapters. Any brand new, I think Chris has more people approaching him than I do, but any brand new trader that approaches me, like really green, that's where I put them. And it gives you a framework of understanding what I call classical technical analysis. And I've heard a lot of traders use that term classical technical analysis in a very disparaging way. And I think it's the biggest compliment you could give a chart or give a trader if they understand classical technical analysis. You understand the main categories of chart patterns. You can spot them. You understand support and resistance. You understand role reversal, support, resistance, replay, retests. And number two is there are always, if you're a fundamental trader or you have a handle on a very specific asset class, like if you are just a euro trader or just a GBP USD trader or just a silver trader, I absolutely understand that there will be moments in the year where there is nothing there. Those markets don't exist to serve us. So there'll be moments in the year where there is genuinely not an opportunity. But if you zoom out and if you are a independent of asset class in terms of your trading skill, there is always opportunities, liquid markets, especially if you're a technician, if you're a technical analyst. And the more opportunities you look at, the greater the chances are that there will be something there for you. When I started trading, I sat down this is incredibly cliche. It was the early 2000s, me, 4 other people at a bookstore every Sunday morning. We'd come with charts and we had homework. And our homework was to take the US stock market. We had a bunch of filters. Everything had to be market cap $100 million or above, had to trade at least 1 million shares on average for the last 30 days, had to be optionable. And then that reduced the number of charts to about 1,700 charts. And we were using this piece of software called Tully Charts 2000, made by a company called Warden Brothers. Chris is nodding his head because only people our age know what the hell we're talking about. And we'd go down then, I'd bring it, I'd take that 1,600 down to about 40, 50 opportunities on daily charts or 4-hour charts, maybe weekly charts. There's always something interesting going on if you broaden your net, if you look at enough opportunities.
Yeah,
and the
that's
practice you get from doing that, I credit those. That was decades ago for me, but I credit the way my brain is wired now to see chart patterns with those early experiences.
That's a great piece of advice. So, guys, ladies and gentlemen, those are some good tips for what you can do when there's not much going on, or what you actually should make the time to do. We've come to the end of our agenda and our session and our episode. So we're going to be signing off. It's been a pleasure as always. Chris, Huzefa, thank you very much. Remember, you can subscribe to our channel. Please do. You won't miss anything. And leave your comments, anything you want to tell us, or any questions you have for us, we will answer in the next episode. But until next week, it's goodbye from us. It's goodbye from Pairs of Aces.
Thank you, guys.
And remember, if you liked and enjoyed our episode of Pairs of Aces, you can subscribe to Daily Forex's YouTube channel. Please add your questions for the next episode in the comments below.